Assalamualaikum and hi everyone. My name is Nurul Syafiqah binti Mazi. I am currently pursuing a degree in accountancy and my student ID is 2025 471 Today I will explain what means cryptocurrency. Cryptocurrency is a type of digital asset that uses cryptography and also blockchain technology to enable securitization without the need for a central authority such as a bank or government. Some of the most well-known cryptocurrency are Bitcoin, Ethereum, and also a Binance Coin. Over the past few years, the use of cryptocurrency has grown rapidly around the world. Many individuals and businesses now use it as an investment, a payment method, and a store of value. As a result, cryptocurrency has become an important part of today's financial environment. However, the aspect growth has also created new challenge for accounting because the current Malaysian financial reporting standard, which is FAR514, do not provide a specific accounting standard for cryptocurrency. This has raised questions about how this digital asset should be recognized, measured, and reported in financial statements. Now, I will explain the main accounting issue related to cryptocurrency. The first issue is that there is currently no specific Malaysian Financial Reporting Standard or MFRS that provide accounting guidance for cryptocurrency. Because of this, company has to rely on existing standard, mainly which is MFRS 138 intangible asset and MFRS 102 inventory depending on how the cryptocurrency is held. The second issue is that this standard were not specifically designed for digital asset. Cryptocurrency has unique characteristics such as a high price volatility, decentralization, and the ability to function as both an investment and a payment method. These features make them different from traditional intangible assets or inventories. Another issue is the difficulty in classifying crypto assets. Some cryptocurrency can serve multiple purposes, making it challenging for companies to determine the most appropriate accounting treatment under the current MFRS framework. In addition, because there is no dedicated accounting standard, different companies may apply different accounting treatment for similar cryptocurrency transactions. This reduces the comparability, consistency, and transparency of financial statements and making it more difficult for investors and other stakeholders to make informed decisions. The rapid growth of cryptocurrency highlights the need for clearer accounting guidance and possibly a dedicated MLIs to ensure more reliable and consistent financial reporting.
Assalamualaikum. My name is Nur Alifa Iana binti Jamaluddin. My student ID is 2025236722. I will explain the impact of cryptocurrency, which can be analyzed in three key areas. First, the most critical impact is financial reporting distortion. Cryptocurrency directly affect financial statements because companies use different accounting treatments, such as classifying it as intangible asset, inventory, or liquid assets. This leads to inconsistencies in asset valuation, profit recognition, and liquidity reporting. As a result, financial statements may not accurately reflect the true economic value of crypto holdings. For example, 2022 study of 40 global companies found out significant variation in how cryptocurrency is classified, which reduce comparability across financial. Second, this issue leads to investor decision-making problems and information asymmetry. When financial reporting is inconsistent, investors receive different financial outcomes for similar crypto assets. This creates information asymmetry, where some investors may misunderstand the true value of a company. A real-world example is MicroStrategy in 2022, which reported a $131 million net loss due to a $170 million Bitcoin impairment. However, without strict accounting rules, the company could have reported a profit instead. This shows how accounting treatment can be significantly influence investor perception and decision making. Finally, cryptocurrency also creates market risk and financial instability. Because of high volatility and unclear valuation, it increases audit risk, misstatement risk, and overall financial uncertainty. In 2022, the number of global crypto users increased from 306 million to 425 million, showing a rapid adoption. However, this growth combined with instability can lead to market inefficiency, especially when a large firm are heavily involved in crypto assets.
My name is Zikri Abdul Mustaqim Azami and my matric number 2025-226968. Let's go through this slide together. It shows us the main problem company and accountant face when dealing with cryptocurrency like Bitcoin and Ethereum. Let's start with the challenges on the left side. First challenge, there is no rule. There is no accounting standard written specifically for crypto asset. This means accountants don't have clear instruction on how to record and report them. Second challenge, we don't know how to categorize it. Because of there is no rule, we are not sure whether crypto should be treated as inventory like goods a company sells or as an intangible asset like a patent and brand name. The answer depends on why the company hold the crypto, and that creates confusion. The third challenge, prices change quickly. Cryptocurrency are famous for their up and downs. One day the price is high and the next day it crashes. This make it hard to put a relevant number on the balance sheet. The last challenge, new activity don't fit the old rule. Things like mining, staking, NFT, and DeFi are brand new. The old accounting standards were written years ago and doesn't even mention this activity, so accountants are left guessing. Now let's look at the right side. Here we see why the standard we already have don't work well. First witnesses, FAR514 or IAS 38, Intangible Asset Rule. This standard was made for things like patent and software. Those are long-term and stable. Crypto are actively traded and very volatile, so this rule doesn't fit. Second witnesses, MFRS 102 or IAS 2, Inventory Rule. This rule only works if the company is a trader that buy and sell crypto regularly, like a crypto exchange. For most companies, this rule doesn't apply. And the last witnesses, MFRS 9, the Financial Instrument Rule. To use this rule, an asset must give you the right to receive cash or some other financial benefit. Most cryptocurrency doesn't offer that kind of contractual right, so they doesn't qualify.
My name is Nur Danila Atira binti Muhammad Syari Hamdan. My student ID is 2025227024. Now, I'll continue with the recommendations for addressing the accounting challenges associated with cryptocurrency. Based on the findings from the review literature, this recommendation aims to address the limitation of the current cryptocurrency accounting practices and improve the quality of financial reporting. First, for standard sector, organizations such as the International Accounting Standard Board or IASB should develop a dedicated accounting standard specifically for cryptocurrencies and other digital assets. Currently, cryptocurrencies are mainly accounted for under IAS 2, which covers inventory, or IAS 38, which cover intangible asset. However, these standards were not designed for digital asset and often result in inconsistent accounting treatments across different organizations. Therefore, dedicated accounting standards should provide clear guidance on the recognition, measurement, impairment, fair value measurement, and disclosure of cryptocurrency transactions. This will improve consistency and comparability in financial reporting. Secondly, for companies, organizations should establish stronger governance policy for cryptocurrency transactions. Since cryptocurrency are highly volatile and exposed to cyber risks, companies should strengthen their cybersecurity measures and implement comprehensive risk management frameworks to protect digital assets and ensure reliable financial reporting. Finally, for professional accountants, continuous professional development is essential. Accountants should enhance their knowledge of blockchain technology, cryptocurrency accounting, and digital asset valuation. This enables them to exercise some professional judgment when recognizing, measuring, and reporting cryptocurrency assets in accordance with accounting standards. Besides introducing practical solutions, it is equally important to improve both financial reporting and internal practices to enhance transparency and fairness. In terms of financial reporting, companies should provide more comprehensive disclosures regarding their cryptocurrency holdings. This disclosure should include the valuation methods used, fair value changes, impairment losses, cryptocurrency-related risks, and custody arrangement. Providing this information allows investors and other stakeholders to better understand and financial position of the company and reduces information asymmetry in the market. In terms of internal practices, companies should strengthen their internal control system by conducting regular internal audits, implementing segregation of duties, securing digital wallets and private keys, and continuously monitoring cryptocurrency transactions. These measures can reduce the risk of fraud, cyber attacks, and operational error while improving accountability and the reliability of financial information. Overall, Implementing this recommendation would lead to greater transparency, fairer, and more reliable financial reporting, better comparability across companies, and increased investor confidence in cryptocurrency reporting. In conclusion, as cryptocurrency continues to grow within the global financial system, accounting standards and professional practices must evolve accordingly to ensure that financial reporting remains transparent, consistent, and useful for decision making.
My name is Nur Akila Shazwani binti Mandi and my student ID is 2025230469. For my conclusion part, I will conclude this cryptocurrency topic by saying cryptocurrency is reshaping the accounting profession by creating new challenge, especially in financial reporting, valuation, and regulatory compliance. As the use of digital asset continues to grow, accountants can no longer rely on traditional accounting knowledge. They must stay updated with the latest accounting standard, regulation, and development related to cryptocurrency to ensure financial reports remain accurate and reliable. In addition, future accountants need to strengthen their digital literacy, professional judgment, and critical thinking skills. These skills are important because cryptocurrency transactions are often complex and require careful analysis and decision making. Continuous learning and adaptability are also essential. Technology is evolving rapidly, and accountants must be willing to learn new tools and adapt to changes in the business environment in order to stay relevant. Overall, by embracing innovation while maintaining ethical values and professional standards, accountants can continue to provide trustworthy financial information and create value in the digital economy. Thank you. So, that's all from us, and that will conclude our cryptocurrency presentation for today. Thank you.